Well, Naspers says it's pleased with its first half performance, and it should be. It's reiterating its intention to list its video entertainment business separately next year. And I'm taking stock on this and other issues with the Vestact portfolio manager, Michael Treherne, and Rayhaan Joosub from Sentio Capital Management. I mean, I think every single one of these monthly wrap-up shows this year that we've done, we've discussed Naspers. Naspers at one point, and you can correct me now, Michael, was 20% of the index, and no matter what happened it was all hinged on 10 cent in China. If that went up, Naspers went up. If it went down, Naspers went down. If Naspers went down, the whole JSE went down. Is it still roughly a 20% weighting in the market?
Still roughly. It still drives our overall market, and as you say, driven by 10 cents. So even though Naspers results came out on Friday, Naspers didn't change much. 10 cents up on Monday, Naspers is up on Monday. It's all Naspers or 10 cent driving it. The main thing with Naspers though is you have a look at the underlying portfolio and then you do the discount to the NAV. 4 of the companies are listed, so Tencent obviously being the big one, Delivery Hero listed in Europe, they got Mail.ru also listed, and then I've gone blank with the 4th one.
Okay, Rayhaan can help you out on that one. Certainly coming through with multi-choice next year, which will be, will that be number 4 and number 5?
That would be number 5.
That would be number 5. I mean, and so that gives you an opportunity to say, those are what those businesses are worth, plus there are another 100 others that can't be worth nothing, and that gives you a sense of total
45% discount, Bruce, and they got $10 billion in cash just sitting around and only about $1 billion in long-term debt. So 45% discount to underlying assets at the moment on a rough calculation.
So why then is the market putting Naspers at such a big discount? Why is it the great opportunity that so many people talk about, but it doesn't match the valuation expectations?
Well, how many fund managers can hold 20% in one stock? And there's limits, and most fund managers are lucky to be holding 10%, and a lot of guys it's even lower. So Naspers goes up, you have to sell. Naspers goes up, you have to sell. And eventually it creates a divergence between Naspers and Tencent.
Hence this desire for an international listing, to give it a global profile so that more global fund managers can look at that discount and say, well, it's cheaper to buy this little company in Cape Town called Naspers because you get 10 cent, much cheaper than if you go to Hong Kong, provided you believe in 10 cent.
I think the management teams recognize that now, and they kind of understand that discount needs to narrow, and they're doing the right things. I mean, one of the other reasons for the discount is the cash burn on the new businesses. That's starting to recede and starting to get a lot better. I mean, the classifieds business will break even this year. The other reason is obviously the unlock of value of trying to get more listed businesses, so trying to help the market, help the fund managers use a valuation for the company. It's listed on an exchange, and they're helping that now obviously with the unbundling of the pay TV business, which is quite substantial. That'll unwind the discount as well. But then there's obviously other issues with respect to the dual voting structure. That's been a big topical issue post-Steinoff as well.
And that's the lack of transparency which scares a lot of people. And people go, well, they make money, so why should we worry about transparency? They know what they're doing.
Yeah.
And that's precisely what people thought about a little company called Steinhoff. That's the one. Sorry, I don't look at the small companies much. But this time last year, all hell was breaking loose in Steinhoff, and it lost 98% of its value from peak to where it is right now, because there wasn't the transparency, because people
100%.
Couldn't see the crisis. They turned a blind eye. I'm not saying Naspers is the same story, but that is the risk of being ambivalent about transparency and governance, isn't it?
Yeah, I mean, and the world's changed post-Steinoff. I mean, everybody like Enron and WorldCom changed the US markets post-2001. Steinoff has changed the South African market forever. If there's any question mark whatsoever about any company, and if the management team does not address it, that stock trades at a deep discount. We saw that with a resilient group of property companies. We saw that with EOH and many other smaller cap companies that have come new listed to the market, and never communicated properly, had issues with respect to potential corporate governance concerns, and those stocks are trading at deep discounts, and that's probably never going to change for at least another 2-3 years. So companies need to make sure that their corporate governance structures are properly in place, communication is properly in place before they get valuation.
This very opaque shareholding structure that nobody really knows who owns what and who pulls what strings where. People can guess and they can second guess, but nobody really knows. Is it Kieromstraat 28 or whatever the number was? Is it Koos Becker, who is the non-executive chairman who really calls the shots? What is the power structure? All of that stuff. It's not enough to scare you, though, despite the lessons of Steinoff.
100%. I think the market kind of is comfortable that broadly speaking, the actual underlying fundamentals of the businesses are fine. So there's no major issues. Okay, so you've got this corporate
The underlying
holding structure.
fundamentals of the Steinoff businesses were fine.
Well, it actually wasn't. It actually wasn't. I mean, it was something completely different. I mean, if you look at the fake buying group, effectively,
Okay.
which was on the auspices of sourcing product globally, but there was no sourcing of any product globally, effectively.
Let's not waste time on the small, the little companies. I want to talk about Viceroy and the Viceroy effect. This time last year, they were picking a fight with Capitec, and we saw a big decline in Capitec, which has then recovered handsomely during the year. There was some concerns about Aspen Pharmacare, and they sold a milk formula business earlier this year, and that share price down very dramatically during the year because people are concerned about the rapid expansion, the acquisitive nature and the debt levels of Aspen. And then came to Resilient Group, and they did issue a report fairly recently during November on Resilient Group. Resilient Group stood firm, and the market seems to have believed them. The Reserve Bank governor has called Viceroy not a weapon of mass destruction, but something equally
like
flowery and creative. Is Viceroy a force to be reckoned with, or should we just ignore them into the future? Because
it shows the power of fear, and it's the sell first, ask questions later. But every report they've released has had less and less of an impact on the market. And I remember when they released it on Capitec, it was, well, even before Capitec, remember it was rumours about which companies they were targeting, and just the rumours used to push the stock price down. But Resilient Group now, Fortress coming out, I think it was this morning or yesterday, saying that they're happy to do or not happy, but they will let the external auditors can come in and have a look, and that's all in response to the Viceroy allegations. So I suppose it's some good is coming of this, even if I don't like them.
No, and you don't. Well, who? Resilient or Viceroy?
Viceroy.
Okay, just checking.
Yep.
Because just the rumours were enough. Again, here's Resilient, was over 200 Rand a share. It's now closer to 100, 110 or thereabouts. Even that uncertainty and the fact that the short sellers at 361, Cy Jacobs at 361 Asset Management saying, there may just be something in this Viceroy report. Not that we've got a short position on it, but there may be something here. Any uncertainty is being punished in this market.
I think also, I mean, if there's smoke, there's fire. So, I mean, there's just too much of issues. I mean, the Capitec one, dissipated very quickly. The Resilient Group of companies seems to stick. So clearly there's some sort of issues there.
And the concern is, and I'm going to put this in the simplest possible way, that they make up values for shopping centres in places like Romania. It's like, it may be worth 10, they say it's worth 20, and who's going to question them? Well, people are starting to question whether or not those are real.
Well, Steinoff had the same thing. When Steinoff happened, everyone did a quick sum of the parts calculation, and a very big part of that sum of the parts calculation was Steinoff's amazing property value. You can't lie about property values. Those things are on the ground. And it turned out that there was a lot of debt attached to it, and they were worth half of what Steinoff was saying. So it is easy to come up with subjective numbers for property.
Irregular share dealings as well, I mean, besides the valuation issues, I mean, and that's been proven as well. So, I mean, there are major issues there.
I want to find from you two, where is a good place to go into 2019? Whether it be into an index, whether it be into a specific sector, or even a handful of stocks. Are you confident enough to put some money on the table as we go into 2019? If you'd done it this time last year, you'd be 15% worse off in Rand terms. Are you willing to put money into markets? Are you willing to add to your RA? Are you willing to take a bet on South Africa's long-term future? Let's do that after this break.